All right, big tech names that took a big hit yesterday. Amazon still down today. It's in correction territory. Want to bring in NYU business professor Scott Galloway. Scott, you've been very critical of Amazon. Some of the things that you are worried about, do you see it now being reflected in the share price?
No, I mean, I believe that Amazon, from an investor's perspective, is probably a buy. And full disclosure, I own most of big tech, or most of the stocks that comprise FANG. I think essentially you had a company whose valuation may have gotten a little bit over its skis, rising interest rates, threat of a slowdown, and also the specter of regulation took the stock down. I think Jeff Bezos actually lost the value of Nordstrom just personally yesterday. I think his net worth declined $9 billion. But I would argue from a strictly economic or business or shareholder standpoint, Amazon has never been stronger. Wherever they bump up against any of the other big tech companies, they're winning, Charles.
So your issue is societal, cultural?
No, my issue is that when you have one company that controls 50% of all e-commerce, that small companies never get out of the crib and large companies are prematurely euthanized, who tend to be better taxpayers and better employers. So while it's great for a shareholder to have shares in a company that is effectively a monopoly in a growing economy, I would argue that that we have a proud history of moving in on companies in terms of antitrust regulation, and that we're at that point in the economy with Amazon.
You know, it's interesting that you would say that, because another big story is the demise of Sears, and you can argue that in many ways Sears was the Amazon of its day. You know, you could buy a house, you could buy firearms, you could even order groceries, and you know, now we've seen where the markets and creative destruction has led to the demise of Sears. You could make the same argument. I remember when Walmart, there were folks who were saying maybe we should break it up, it's too big, it's growing too fast. So what about the idea that the markets ultimately will do what perhaps you are suggesting we should do legislatively?
I think that's a fair point. It's a good argument. You're right. Walmart was hauled before Congress when they were at 11% of retail, and Amazon's only at 6%. I think a more apt analogy would be the railroads, or Ma Bell, or even Standard Oil, where we decided that effectively the markets were no longer competitive. I mean, you now have a company where it puts out just a press release saying it's going to address health care costs. We don't know if that means they're giving their employees gym memberships. We don't know if that means they're starting an HMO. And on the opening bell the next morning, Charles, the healthcare industry sheds $31 billion in value. So when one company can take down the price of any other consumer company almost by a third just with press releases, I would argue the markets are no longer competitive. And key to this great system we call capitalism is that no one player has too much power. In addition, I think if you broke up Amazon, shareholders might benefit. I think if you spun AWS, you know, soon after the spin, the two companies in aggregate might be worth more than the two companies are combined. So good for shareholders, good for the economy, good for the planet.
I get where you're coming from, Scott. I will say, though, to your point on these companies selling off on Amazon News, a lot of them eventually rebound. I remember Wayfair going down to $60 when Amazon said they were getting into the furniture business, and the stock went on to rally significant from there. So some of that is just the overreaction with our stock market. But it's always a pleasure having these discussions with you, and hope you come back real soon. Thank you very much.
Thanks, Charles.